Is Canoo stock a buy, sell, or a hold? I'm going to answer that question in this video looking at some of the company's financial metrics. So let's jump right into it, starting with revenue. And if you're looking at a blank screen, that's not a mistake. Canoo has not generated any revenue yet. It's delivered very few models, and these were more so test models than really sales of actual of its vehicles. And so companies invested over $1 billion in the technology and the manufacturing to ready itself to start generating sales, but that just hasn't happened yet. Management is saying by the end of 2023, they're going to be able to produce a 20,000 vehicle annual run rate. Now, that remains to be seen, and management and this company has made promises before and has missed those targets several times. So it's understandable for investors to be skeptical when management gives you these targets. And they've also said that they're going to hit a 40,000 vehicle run rate by 2024. So they certainly have plans to ramp up production, ramp up delivery over the next year and a half. But investors have come to look at Canoo as a wait and see type of company instead of okay, you're saying you're going to do this, we believe you're actually going to do it. And so with no sales, the company's burning through money, right? They're losing money on the bottom line, but they've reduced those losses in the most recent trailing 12-month period. Operating income was negative 347 million. That was an improvement of the close to negative 600 million in operating losses it was hitting earlier in 2023 and later in 2022. So this is an improvement. This is getting itself in better position for eventually raising more money, either through borrowing more money or selling more shares. It's already sold some shares to raise some money, but it's probably going to have to do more because it's not at the level yet where it can produce 20,000 vehicles with the amount of money that it has on hand. And so this is cash flow from operations, which is different from operating profitability. This is the actual cash that's leaving the company from operations over the trailing 12-month period. And this also has improved from close to negative 400 million up to negative 292 million. So it's getting better. It's stemming the losses. It's stemming the cash outflow from operations. However, it really just needs to start producing, getting these models out there and starting to generate sales. Now, management has commented on this slow approach, saying that they would rather get things right and get things perfect instead of sending out these cars and then having to pay money and do a bunch of recalls and refunds and that kind of thing. So I guess that's a prudent way to think, but when you're in a position where you've burned through so much money, at this point, you've got to start delivering some vehicles, in my opinion. You've got to start sending these cars out on the road and let your clients tell you what needs to be improved, because you might be spending so much time on a certain product feature that when it goes out into the market, your clients barely ever use it or don't realize that it's not working the way it should. And so let your clients tell you what needs to be fixed instead of taking so much time trying to perfect things. But that's just my opinion. And finally, the last thing I want to look at is valuation. And the stock is down significantly off its highs, right? It's trading at a forward price to sales of 0.529 when it used to trade at a forward price to sales of over 24. The stock price is down. It's down significantly from its IPO. So unfortunately, investors have lost a lot of money with Canoo stock. And to answer the question if this is a buying opportunity, I would say no. I don't think the stock is a buy. In fact, I think it's on the borderline between a hold and a sell. A sell. Especially if you've got some losses and you could do what's called a tax loss harvest and at least get a tax benefit out of those losses. Speak to your accountant before you do that though. I'm just skeptical of Canoo's ability to ramp up to the production that they're targeting, especially the 40,000 run rate target by the end of 2024. It just seems like with the capital they have on hand and the current higher interest expense environment, I don't know if that's a feasible target or if they're going to have to lower targets and push out deadlines again. So with this company, I would wait. I would wait for them to prove it to me before I go in speculating on their prospects.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.